US stocks rose on Monday in a slight bounce back after 4 weeks of market swings in response to President Trump's tit-for-tat trade war. The Dow going up more than 350 points, slightly below a 1% gain. The Nasdaq edged up 0.3%, while the S&P 500 climbed 0.6%. But those gains could just be the calm before the storm, with the Federal Reserve expected to make an interest rate decision later this week. Now, over in Europe, stocks continued their rally from last week, thanks largely to optimism over German debt reform. The UK's FTSE 100, France's CAC 40 and Germany's DAX all closed the day about 0.6% higher. And stocks in Asia also edging up higher on positive retail and investment data out of China. Hong Kong's Hang Seng was up more than 185 points on Monday. Japan's Nikkei ended the day even higher as yields on 40-year bonds hit a record high. And South Korea's Kospi closed the day up 1.7%. Now, joining us with insight into what's moved markets today is Ryan Patel. He's a senior fellow with the Drucker School of Management at Claremont Graduate University. Ryan, great to have you on the program today. Some people are now shifting their investment strategies as the stock market sours a little bit. Is Trump's policies on tariffs to blame here? Or, is the stock market more complicated than that?
I mean, I think the stock market's more complicated to that, but the tariffs don't help, right? I think if you think of the tariffs, you think of an extra fee on consumers and rising prices, which is something that the markets were already battling when it comes to margins, inflation, things where you should put your money, what kind of return is. So the tariffs obviously created this uncertainty, which then leads to kind of what you've seen in the consumer price index. The consumer confidence tend to kind of hold money to the side and less money going into the economy. And that's just in the last couple months, per se. When you think about what the future lies, I think the key economic driver of that for the U.S. specifically will be what it's kind of the certain plan and sustainability of the certainty of what they can do on growing different industries.
Yeah, and policy and politics have been the key drivers of concerns among consumers for some time, but not everyone is taking action. How long do you think consumers need to wait it out before stocks start to recover again?
Yeah, I mean, I think the last 2 days we saw a little bit more positive gains. I think, the markets, if you think about consumers too, they're tied to it. So they're looking for good news. And the good news is what is going to drive inflation down. With the Fed meeting later this week, I don't think they're going to see a cut in that meeting or even maybe more details that they have. So I think for the consumers, try to create some more savings to see what the next couple months look like, because you're still not sure since the average price check of the grocery is still going up, and you want to be prepared for that. So I think they're still waiting on the sidelines for the time being.
Trump's America First policies are allegedly boosting stock markets overseas. Is that the observation you're making?
Yeah, I think it depends on what region, right? If you think of what he's trying to do with this policy is creating better bilateral trade deals that kind of create win-wins potentially for both countries. I also think that maybe some of the markets overseas is saying this is how it's going to be for the rest of the year. And I think the optimism too for other countries is that Trump's fueled by deregulation and potentially creating more businesses to go outflow and inflow. And I think that's part of the that's outlook that they're seeing.
I think also an increase in military spending by NATO leaders is fueling shares of weapons makers and helping to power European stocks to their strongest start to any year since 1998. But in terms of tech stocks, they keep tumbling this year. Has the AI hype come and gone, do you think?
Well, I think the AI is here. When you say AI hype, those companies that call themselves AI, even though their main business is there, I think the valuations of those companies are starting to look out. So I think the artificial intelligence companies and those who use it, that is where we're going into, where the market's kind of correcting itself, which it makes sense, right? You see some of the leaders going a little more value than they are. And I think part of this conversation as a tech company is back to the bottom line and seeing how they're looking at, the long-term growth. And we've had a really great run in the tech industry when it comes to markets. So I think it's catching up a little bit to right size and what the actual future growth plan is. People are asking those questions now.
And of course, Elon Musk faced a week of harsh setbacks amid Tesla sell-offs and Doge backlash. The world's richest man now saw his fortune sink by more than $100 billion. Tesla stocks seem to be dropping further Monday. Can you talk more about what's fueling it?
Yeah, I mean, obviously you mentioned it, right, with Elon, and more importantly, Tesla stock is kind of a roller coaster because it's kind of talking about the innovation and challenges of scaling something when it comes to a competitive EV market. And there's a lot of competition in that market. So if you put Elon to the side and you focus on Tesla, I think Tesla's focusing on AI, energy solutions, and autonomous driving. Like that's what they're focused on, that they're hoping to be game changers, not just in selling cars. And so the short-term pressures on Tesla is facing, right? You got declining margins and the competition is coming on, and that's what you're seeing the impact on the stock.
Ryan Patel, thank you so much for your time.
Thank you.